so institutional
Yep.
traders, buyers are saying, I need some exposure. So the problem is, and this is what's confusing a lot of people, problem is a lot of these guys are not mandated to hold physical, especially the US guys, not mandated to hold physical. They can buy and sell shares and they can do it on the click of a mouse. They are now, as we know, we're talking about the 2020. So we're looking at a lot of people coming out and saying 20% allocation to gold. Hey, can you remember any of this trade?
Goodness.
I mean, it was like if you wouldn't even have 1%.
Right.
You wouldn't have a 0.5%.
You're a lunatic to even bring it up.
Exactly. So now you've got all these institutionals. Now, the interesting thing is they can't necessarily buy physical. They're buying the ETF. Now, you and I are great. We don't believe in the last place I want to go and buy gold is an ETF.
The silver market's tension is no longer a background issue. The price structure, odd delivery patterns, and the widening gap between paper contracts and actual physical metal are all beginning to show signs of it. Andrew Maguire cautions that the current situation is more than just day-to-day noise or transient instability. It indicates that the system is being overextended. Physical tightness is typically indicated when adjacent contracts start acting erratically and forward prices start to lose their typical form. However, this is not a minor, localized imbalance. Maguire claims that the distortion is permeating the entire system, from COMEX inventories to London vaults, and it implies that silver that should be there isn't. Large organizations have been managing these gaps for years by shipping metal around the world and resolving disputes covertly before the public was aware of them. However, Maguire contends that this delicate balance is deteriorating. The players who used to intervene no longer have the metal, the motivation, or the self-assurance to stabilize the situation, and the stock that is available is decreasing. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets.
Oh, completely different. And I think the difference is, again, pretty much what we've just discussed about gold. It's the same in silver. The real actors are gone. And I think this open interest that's in there, it's very limited as to what they can actually rinse out, because we've got physical markets being set in China. We work with the liquidity providers who interact with the Shanghai International Exchange, and really looking at what they're talking about. There's very little. It's interesting because I think what really sums it up, and you and I were talking about backwardations a little while ago. While we have unprecedented backwardations, we've seen $3 backwardations in the past. They get arbitraged one thing and another, but so close to first notice of the largest delivery contract of the year. We're seeing on last Friday, 60 cents, $3,000 per contract offside. Now we're still looking at 20, 30 cents. I mean, ludicrous into first notice, through options expiry into first notice, which is actually supposed to be tomorrow, but it actually happening today because it's
goes off the board on Wednesday and trades first notice on Friday. Yep. End of the month.
Exactly. So, so what it tells us, what it screams at us is, hey, you can't have a backwardation coming into a delivery month where it's not telegraphing to you it's mispriced, severely mispriced. And I think the reason for that, Craig, is because the LPMCL's CME relationship, where they've got a footprint in both markets, haven't they? The liquidity spigot is broken. It's completely broken. They don't have liquidity anymore to be able to pull this back. And what you got, like 4 billion in SLV shorts, and some of that, yeah, there's going to be some legitimate hedging in there, but 4 billion in short positions. That means that if I own an SLV share, it isn't there necessarily. Not if everyone wants it at the same time. And so I think it is screaming. I mean, to be honest, I think these guys are turning in on themselves. And like I said today in an episode, I think they're fighting like rats in a sack now, trying to short cover these massive shortfalls because nobody is there to help you anymore. And literally, you can't print silver. You can print more money to buy more gold at a higher price, but there just isn't the silver there. It's just not there.
Yeah.
So how the hell are they going to extricate themselves from this position? That's why they're in backwardation into a delivery month. Where does that extrapolate out?
Yeah.
to me, it's $80. Yeah. And I think silver is the Achilles heel of this same group of people. RPMCL are just the 4 banks that basically control the cartel, basically. And I think their liquidity is completely blown to smithereens. All the institutional guys, as we've just said, they've exited. And now you can still access, as an institutional trader, I can then go in and tag the SGEI gold corridor, which is opening up big time, can access an increasing number of vaults, gold and silver that can be traded with a real physical price that is much more stable than this unbelievable paper toxic mix that is thrown in. And it only serves. And I think the reason that we're seeing less volatility and the reason we won't see these kind of big sell-offs again, there's just simply not the liquidity to do so. It's gone. It's literally gone into physical markets. And if I'm a producer or a refiner or something, why would I want a price that's so volatile? I just want to know supply demand. People are owning a bar before it's put for sale. You have to own it before you can sell it, which tells me that if you put it up for sale, that's a proper price. I don't care what that price is. It's the proper price. Right. It's not a COMEX derived price. It's a physical price based on supply demand on the day, based on purely on that supply demand. That is how markets are supposed to trade. And we've been gaslighted, or many people have been gaslighted into believing that this huge COMEX volatility is the market. It just amazes me.
Right.
Andrew Maguire is not referring to a little change in investor inclinations. He's talking about a significant shift in who enters the gold market. Big money managers who relied on government bonds as safe investments for years are now beginning to see significant issues with that system. Additionally, they don't wait around when warning indicators emerge in the bond market. Instead, they transfer their funds to an alternative that is not part of the financial system. However, this is a crucial detail. The majority of these large organizations are prohibited from purchasing and storing actual gold. Only paper items such as gold ETFs are permitted for them to invest under their regulations. Therefore, when one of these funds chooses to commit, say, 20% of its portfolio to gold, it is purchasing enormous quantities of ETF shares rather than hoarding gold bars. Even a little gold allocation would have been considered excessive not too long ago. These same companies are now racing to fill roles that they neglected for years. This indicates something crucial. Short-term traders seeking a rapid profit are not the source of demand for gold ETFs. Show some love by hitting the like button, subscribing to the channel, and turning on notifications.
Physical issues? Is it central bank buying? Is it a combination of all this? What are you seeing?
Yeah, absolutely. I think silver was just a little, was just the more obvious version of that. But yes, because it's hard to hide the footprints. But absolutely, this is, as we know, central bank, sovereign, institutional buying. Now, all of a sudden, we've got, for all the reasons you have, the cockroaches running around in your treasury markets now. And I think people are looking at it and going, hey, I really have never had exposure to gold. So institutional, traders, buyers are saying, I need some exposure. So the problem is, and this is what's confusing a lot of people, problem is a lot of these guys are not mandated to hold physical, especially the US guys, not mandated to hold physical. They can buy and sell shares and they can do it on the click of a mouse. They are now, as we know, we're talking about the 40-20-20. So we're looking at a lot of people coming out and saying 20% allocation to gold. Hey, can you remember any of this?
Oh my goodness.
I mean, it was like if you wouldn't even have 1%.
Right.
You wouldn't even have a 0.5%.
You're a lunatic to even bring it up.
Exactly. So now you've got all these institutionals. Now, the interesting thing is they can't necessarily buy physical. They're buying the ETF. Now, you and I are great. We don't believe in the last place I want to go and buy gold is an ETF. However, they have no choice. So, but because they're buying for keeps, they're not going to take delivery. They are going to own that position. And it's sticky. They cannot be rinsed. You cannot say, in fact, you drop a price down, they'll buy more because they're buying more every day, because they're moving from zero allocation to 20 to 25% and more in some instances for obvious reasons. So therefore, people look at it and go, oh, look, there's all this open interest building in the ETFs. It's not speculative. This is sticky stuff. And obviously the physical market is all we care about, but it actually is forcing, even though there's shorting going on in the GLD and one thing and another, it's still a physical market. And it's the physical supply demand is being set outside of the LBMA ring fence.
Mhm.
And so therefore, it's back to same as silver. If I have a bar and I have to own it before I can sell it, I need a real price. I want a real price. So I will only sell it to you. And the more you want, the more I want. But when
For
you look
silver.
at, silver, sorry. So, but then if you look at January, that's already in
Teetering.
technical backwardation.
Mhm.
So it is happening. It is happening already. And now we're talking about 2026 and they're not even done. I think this morning I looked, there was still, I think 2,000 odd tons of, silver warrants floating
Yeah.
around in there. And the thing is, there's a lot of people that I know and who are saying, well, yeah, we bought and we're taking delivery. We are taking delivery.
Mhm.
Why? Because it's the only source of physical that I can get to my limit, to my actual limit. I can buy that. And so if that's the only source of physical, going to be banging on that back door, out it goes. So how can that possibly be, and that's mispriced. It's so grossly mispriced.
In reality, Andrew Maguire is telling us that this isn't merely another rally or market cycle. This is a profound, systemic change. The wealthy individuals who previously disregarded gold and silver are now frantically trying to get attention, and they are acting in this way out of fear for the future of the bond market and the larger financial system, not out of optimism. Because of this, the current state of affairs differs greatly from a typical bull market. In a typical cycle, speculation drives up prices, which then decline when the excitement subsides. But in this case, long-term planning, fear, and protection are driving up demand. These organizations are not attempting to time the market. They are attempting to survive what they think will happen next. However, the actual supply of gold and silver is not expanding quickly enough to satisfy this new surge in demand. Paper markets can act as though there is more metal than there is, but eventually the truth catches up. The only thing that can alter when there is a shortage of real, deliverable metal due to increased demand is the price. Maguire thinks the market is nearing a breaking point because of this, a place where real metal and paper promises eventually clash, and only real assets in real hands at real values will be able to rebuild trust in the system after that, not words or policies. This is not just about making a profit, it's about understanding where safety really lies when traditional markets begin to crack. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.